Once again, my name is Stephen Primo. I am the founder and president of Specialist Trading. I have been giving these webinars on FX Street since the beginning of the year, but for those of you who are not familiar with Specialist Trading or myself, just to remind you, SpecialistTrading.com offers unique education and courses in trading. We offer courses in the stock, E-mini, as well as the Forex market, which is a little bit better. So the Forex market is what we're going to be concentrating on here. And to give you a little bit of background about myself, I have been actively trading all of these markets for the past 34 years. Now, I began trading on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years, I was a specialist for Donaldson Lufkin and Genret. Now, I'm getting some messages that you can barely hear me. Hopefully, it's still coming close. Some people say I'm too close to the mic, but I just want to make sure that you're getting everything okay. But as I was saying, I've been trading for 34 years. I was a specialist on the floor of the stock exchange for 16 years. I was on the floor, and 9 of those years I was a specialist. Okay. After I left the floor in the 90s, I continued to trade, to manage people's accounts, to trade my own account, and about 5 years ago, I started, with my experience, I started actually teaching for other websites, other systems, and other strategies. And in the last 2 years, I decided to go on my own, and I decided to actually teach the strategies that I trade myself, and that's when I formed Specialist Trading. Now, even though my background, as you've seen, is in stocks, basically everything that I learned, all of the techniques and strategies I learned, can all be easily transferred onto the Forex market. So I'm going to be sharing with you a lot of my techniques, strategies, and secrets that I learned on the floor and sharing them with you in these upcoming webinars. Now, what we're going to be talking about today, we can start here, is part 2 in a series of the correct way to use the RSI in Forex trading. Now, the RSI is a very common tool, very common indicator that most people use, but most people, I found, are using it incorrectly. In part 1, I showed you the correct setting for the RSI, and I'm going to show you how to actually use the RSI in your Forex trading with this correct setting. I'm going to show you how you can use it in intraday trading. You can do that with an hour chart or 4-hour chart. You can use it on daily bars, or you can use it on weekly or even monthly bars. This is a great methodology, and you'll begin to use this information as early as tomorrow if you'd like. Okay? So before we begin, though, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results, as I said, at this new way of how to use the RSI, but remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So as you're taking a moment to view our disclaimer, also, once again, because of the volume problems that I know we're experiencing, there will be a question and answer portion, but could you please wait till the very end? So wait till the very end of the presentation to ask any questions. I realize that many of you may not hear things as well as other people are, but just wait till the end. We'll answer everything. If we happen to run out of time, I will give you an email address as well as a phone number. If you want to email us, we'll answer any question you may have that we may have missed, or a phone number if you want to speak to someone, okay? So there's lots of ways to ask questions, okay? Now, I'd like to start out, this is what I started out our last webinar with, and I want to bring this up again. This was an article that was in the LA Times. I work and trade out of Los Angeles. This appeared just about a month ago, and it specifically had to do with currency trading. It said basically, foreign currency trading is easy. It's an easy way to lose money. Now, where most traders and most, especially educators, would disagree with this and try to, dissuade you not to listen to these type of things, I actually agree with this. Most people do lose money trading the foreign currencies. I'm sure many of you are having a very difficult time trading. But I think the reason why we're losing money is not because you have a faulty strategy or because you're going at it completely wrong. I think mainly it's because what I often say in my webinars and my teaching is that we're getting in our own way. We're our worst enemies. For some reason, we are sabotaging our results. And this happened to me when I was trading on the floor, and this happens to everyone else. And so what we really have to do is simplify our trading instead of getting in our own way and complicating our trading. So my goal is to teach you how to trade with the Specialist Edge. Now, this edge was taught to me, as I've said before in many of my webinars. I, know exactly how you feel when you're struggling with your trading. I struggled for years. I basically would have great months followed by disastrous months. I'm sure a lot of you can relate to this. I would make tremendous amounts of money, and then I would lose it all in a couple of weeks. And this kind of cycle continued to go on and on until I met a few specialists on the floor who turned my way of thinking around. And as I said, their edge was not about adding more and more indicators, looking at more and more news, or adding more and more screens to trade from. What their edge was actually about stripping away all this noise. They weren't concerned with any of these things, and they were trying to simplify their trading. So once you let go of complicating and you really try to simplify your trading by using things that I'm sure you've heard of before and you've seen before, but by using them properly, I'm going to try and transfer this edge to you to simplify your trading so that you'll get on the road to consistency. Okay, so this is what I'm trying to get to your trading. We're not talking about hitting home runs. I'm not going to promise you that you're going to be a millionaire by next year. I'm not going to tell you that every trade is going to be profitable. There are going to be losers. But what I'm going to try and teach you is this consistency in your trading, so you won't anymore be wondering, boy, am I ever going to learn how to trade? I've been doing this for years now, and I can't seem to get ahead. We're going to try and change that. I do this on my website for my students, and I'm going to try and do that in the next hour by sharing some of the things with you. All right, so here's what you're going to learn today: the correct way to use the RSI in Forex trading, because as I said, most people are using this indicator incorrectly. And it'll work for a little bit, just like the slot machines. If you go gambling, you'll win a little bit, but then ultimately you'll give it all back. If you stay using the same machine long enough, you're going to give all your money that you made back. That's the same way with trading. So we're going to show you the correct way to use the RSI. All right, so let's recap here. For those of you who weren't in my first in this series of webinars, let's just recap, take a few minutes to go over the correct settings for the RSI. This is edge number 2, a proper setting for the RSI. All right, what we want to do is edit the standard setting on the RSI, which is usually a 14 period. That's the default setting. So what we want to do is edit that to a 5 period. Okay, if you can hear me now, that's a 5 period. We're not going to go into the details of how the RSI works, but basically the standard setting of 14 periods looks back 14 bars, and that's how it comes up with its calculation. What we want to do is only look back 5 bars to come up with our calculation. So we're kind of speeding it up a little bit. So what we're trying to do is get rid of that slower length and then set it to a 5 period setting. Okay? Now, specialist trading is not a broker. We do not furnish you with a trading platform. So if you are using your current trading platform and you're not sure of how to edit that, I would suggest calling up your tech support, and they can probably do it for you, or they can go over the phone and show you exactly how to do it. It's not very difficult, though. Okay? So we want to edit the standard 14-period RSI, the length, many times as it's referred to, change the length to 5 periods. All right, now here's a chart. It's an older chart. We're just using this for example purposes of the British pound with the standard RSI plotted. This is the 14 period. This is the standard default setting. And as you can see, the RSI here in blue is what it would look like in this particular time frame. There's really not a lot of effect to it. We have the overbought, oversold levels to it, but we're kind of going sideways. There's not much we can discern from this. Now what we want to do is change it to 5 periods. Okay? Now you see how it's a little bit more dynamic now that we have sped up a little bit. So this is the 5 period now. Okay? All right, so let's talk about the incorrect way, once again to recap, to use the RSI indicator. And this is probably the way the majority of people use this indicator, as an overbought, oversold tool. Now, one of the most important things that was taught to me on the floor by my mentors, that these elite group of traders who turned my way of thinking around, who got me on the road to being consistent, was that there is no such thing as overbought or oversold. Okay? I'll say that one more time. There is no such thing as overbought or oversold. This is really a myth. Something can go up as high as it wants to. It can continue going higher and higher. There's no such thing. And there's no such thing as oversold. Something can go as low as it wants to until eventually it's worthless. So, don't get caught into this trap where this is tremendously overbought, I've got to sell it, or it's tremendously oversold, it's time to buy. As I said, I used this way of trading, and it worked for me for a period of time, and then I would give everything back when it didn't work. And remember, what we're trying to do is get you to be consistent. We're not saying that this is going to work each and every time, but we're trying to get you on a road to consistency. And using the RSI as an overbought, oversold tool, or any overbought or oversold tool for that matter, will not get you on this road to consistency. Let's show you what I mean. It's that same chart we talked about before, the British pound. We have the 5-period RSI plotted, and here are the overbought and oversold levels, which most people would look at on RSI. Let's just say we're, for all intents and purposes, we're going to trade this the way most people do. When we get to overbought, we'll sell. When we get to oversold, we'll buy. Well, here's the first overbought level when we close the RSI closed above the 70 level. Okay? If we correspond that with where it is in price, you would have sold here. And as you can see, for the next week, it went straight up, and I don't think most people would have held on to that losing trade of about 200 or 300 pips. Now, later on, the RSI finally got into what was supposedly oversold territory. Now, had you simply bought, well, you might have, if you were lucky enough to get in and out in the next 2 to 3 days, picked up 100 pips or so. So here it did work. Like I said, it will work from time to time. But now we go to oversold again, once more, circled in green. So you jump back, into the water here, take advantage, and look what happens. Everything you just made, you gave back. Another 200 or 300 pip loss. Now we go into oversold again. So you're going to buy again. You're going to try it one more time, see if you can make back everything you lost, and lo and behold, we're down another 100, 200 pips. The last time we go into overbought territory. So now you're going to sell. Now you're going to catch this move to the downside, and lo and behold, we go even higher. Now, if we had theoretically taken all of these trades, and remember, this is not a strategy. I'm just showing you for example purposes, educational purposes. You would have basically, in the next 3 months of this time frame here, you would have lost around 600 pips. And at this point, you either would have been throwing in the towel and saying forex trading is not for you, or you would have been looking to ways to make more money to try another technique. And this is the way most people trade. So, we want to get on this road so that we're in a consistent way of trading. So what we want to do is get away from what, for some reason, we've been taught or learned is the correct way to use the RSI. And this is the incorrect way. As I said, it may work 9 out of 10 times, but that 10th time you will give back everything you made. I know from personal experience. I know I've gone through this before. And so I don't want you to have to suffer like this and think you're doing great and then give it all back. All right, so let's go on to today's presentation, which is our third edge in this series of presentations, the correct way to use the RSI. Okay, so we now know the correct setting. The correct setting should be changed from a 14 to a 5. All right, so we only want to look at the RSI with a 5-period setting. Now, how do we use it correctly? What we want to do is edit the standard overbought, oversold thresholds to 50. Okay, that's what we're first doing. So, as you recall, we had a overbought level and an oversold level. We just want to make one level at 50. Here's what I mean. Here's another chart of the British pound. Once again, here's the 5-period RSI. Here's the overbought, oversold thresholds. We want to change those to make only one at 50. Okay? So we're getting rid of the overbought, oversold for right now. We're just looking at this 50 median line. All right? So this is the correct setting that you should have. A 5-period RSI and then a single midline at 50. All right. Now what do we do? Once we have everything set up on our charts, how do we use it? You may want to write this down. I'm not sure if this presentation, I'm sure, most of my presentations are recorded, but if you want to start using this as soon as possible, you may want to write this down, so I'll go slowly over this. But this is the correct way to use this. Let's say you're buying, okay? What we want to see is price must be above the buy-sell line, or that's our 50-period simple moving average. For those of you who have seen my webinars before, this is our most popular edge here. It's the buy-sell line. It's the 50-period simple moving average. So we have to have that plotted on our chart as well. So if we want to buy, we have to see that the price, the chart, is actually above the buy-sell line. We can't even consider shorting or even going long if we're not above the buy-sell line. We have to be above the buy-sell line, okay? Once that we see that price is above the 50-period simple moving average, we want to look and track the 5-period RSI. We're going to enter long when the 5-period RSI crosses above that 50 threshold. Okay? We're not even considering if it crosses below or above the overbought or oversold. We're only looking at the midline. So when we cross from being below the 50 threshold to going above, and when the RSI closes above, that's our signal to enter. Okay? Don't worry if this seems a little wordy. I'm going to show you examples of how to implement this. in the charts just in a few seconds. How about if we're going short? Well, the opposite now is true with the 50-period simple moving average. If we're going to be going short, price must now be below the buy-sell line. This is extremely important. I know a lot of people ignore this rule, but this is extremely important. You cannot go short if price is above. We're not trying to pick tops and bottoms once again. That's a recipe for a disaster. You're going to once again have some really great trades, and then you'll give it away when price continues to go the wrong way. It goes against you. So we only want to be in sync with what the buy-sell line is telling us, and if price is below the buy-sell line, we're only going to be looking to go short. Okay? Opposite is true if we want to go long. All right, so how do we enter the trade? We're going to enter when the 5-period RSI now crosses below the 50 midline. Okay? So in other words, it had to have been above, and when we see it cross below, that's our signal to enter. All right? So this is what we're doing. Yes, you can just draw a horizontal line at the 50 level. Okay? I don't want to get into answering any questions now, but yes, you can. There's, it doesn't. If you can't remove these overbought oversold thresholds, just as long as you have a median line, so you know where this median line is. All right. Let's apply the RSI step by step. Okay? We're going to apply this. This is not a strategy now. This is the makings of a strategy. But I'm going to show you how to apply this. If you wanted to, you could start using this as early as today. In fact, I'm going to give you a clue at the end of the presentation where there is an actual setup occurring as we speak. All right. Here's a chart, an old chart of the British pound once again. All right. So the first thing we ask ourselves, very first thing we ask ourselves before we look for the RSI, before we look at anything, we ask ourselves, where is price in relation to the buy-sell line? Right here. Price is above. All right. So this means that we're only going to be looking to go long. We're not going to even consider, going short, trying to pick a top, trying to catch the top of this and get out. We're not even going to consider that. If we're looking to enter into the British pound and price is above, we're only going to be thinking about going long. This is probably one of the biggest and most common mistakes people make. Go back and check your trades and see how many times you're out of sync with this. All right. So we're above the buy-sell line. This means we're going to go long. Now we go down to our 5-period RSI. Okay, as you can see, we're above, so we're going to go long. Now we look for the 5-period RSI, must be below, and then cross back up above the 50 median line. And when it closes there, do you see how we have it right here? It must close there. It can't go there intraday and give you a buy signal. It has to close above the 50 line. Once it closes there, you want to see what the corresponding bar is. And that would be this bar right here. So what we're going to do is we're going to then go long, not at the market, but we're going to enter into this trade once we trade 1 pip above that bar. Okay? Here's the bar right here. Once we trade 1 pip above, we'll enter into the trade. And there's where you enter. Okay? And as you can see, the trend continued upwards. Now, as you can see, we have another setup later on in the week where we once again go below and then we close up. We check out the corresponding bar, and that's this bar here. So if you wanted to enter in again and have another double entry, you're going to enter once we trade 1 pip above, as you can see, and we would have continued to go higher. Remember, please, to wait till the very end. I'm not going to answer questions now. I don't want to break up this. We will get to questions at the end of the presentation for those of you who came in a little later. But this is basically, in a nutshell, how this works. We're only concentrating on entries at the moment, but as you can see, you can either take the first signal and just wait, or you can take multiple signals if you like. If you have a big enough account, if you have enough capital, and if it fits our money management strategies as well. How about to the downside? Well, same chart, another chart. Same currency pair, but another chart of the British pound. What's the first thing we ask ourselves before we even consider getting into the trade? Where is price in relation to the 50-period simple moving average or the buy-sell line? Price is below. Okay. So this means we're only going to be considering going short. We're not even going to think about going long. This is where most people once again get hurt because they'll see something going down. They'll say, hey, the RSI is oversold. I'm going to buy. And it just keeps going lower and lower. So, I'm trying to teach you about consistency, and one of the main factors of being consistent is learning how to be in sync with the market. if the market is telling you it's below the buy-sell line, what it's trying to say is that most likely we're going lower. So you should only be looking at short setups, all right? All right, so we're only going to be looking to go short. And the next thing we want to do now is once we've decided we're only going to be short, we look at our RSI. And we want to see the RSI, which is above 50 at some point, now cross over and close below the 50 median line right here. Once we see that it closes below, remember, it's not enough for it to be intra-bar. You know, sometime during the day it goes below. That doesn't mean anything because it could close back up above the 50 line. We want to see that it closes below. And once it does, we see the corresponding bar that is associated with that close below. And that's this bar right here. All right? So we're not going to go short at the market because sometimes a trade will not happen. Sometimes the next day it will go back up. So what we want to do is use our confirmation method, and we simply wait to go short if we trade one tick below, or 1 pip below, excuse me. And this has to be on the next bar, okay? That's another thing that's very important. Since we're trying to catch momentum, we cannot go short unless it trades below on the very next bar. So in other words, one of the common mistakes my students make is they'll wait 2 or 3 days and then they'll say, hey, it went below finally, so I'll get short. No, it has to happen on the next bar. If it does not happen on the next bar, then the trade is negated. Okay? All right, so as you can see then, you would have entered right there, and then the trend continued lower. Do you see how this is a much easier and simpler way of just being in sync with whatever you're trading? Now, I'm not going to sit here and tell you that this works 100% of the time. Nothing does. But this just elevated your chances for being more successful and profitable and more importantly, consistent in your trading because you're finally using this tool correctly. This is what was taught to me on the floor, and this is the way I trade now, and this is what I'm trying to share with you as well. All right, let's look at some other time frames. Remember I said if you just stick around long enough, you'll see your questions are answered. So please wait till the end of the presentation to ask questions. But here's a weekly chart of the dollar-yen. Same concept applies. We're below the buy-sell line. Every time we cross below, we simply look for the corresponding bar. If we trade 1 pip below, that's where you would have entered. And as you can see, it's downward move. We cross up above. We cross down below and close below 50. Once again, the corresponding bar, that's where you would have entered. More movement to the downside, and so on. All you're doing is finding a way to be in sync with the trend. Here's a 60-minute chart of the Canadian dollar. Same concept applies, but this time we're above the buy-sell line, so we're only going to be looking to go long. All right? We're tracking the RSI. When we see that it closes above the 50 line, we look at the corresponding bar. Here's where your entry would be. Now, here it doesn't take off automatically, but it's setting up for a very nice large move ultimately. And it's telling you in advance where the direction is going to be. So, as I said, not everything is just a perfect move the minute you get into it, but it's telling you what it wants to do. Sometimes it may take a little bit longer than most. But on average, you'll find out within the next 2 or 3 or 4 bars what the direction is of the trend. Here's a 4-hour chart of the Swiss franc. Same concept applies. We're below now the buy-sell line. We cross and close below the 50 threshold, and we just simply track the bar. As long as we're still below the 50 threshold, you can continue to track it if you'd like. This is one thing that my students, don't understand, because many times when we close back up, they'll continue to think they'll go short if we trade below. But if we are still below the 50 threshold, you can continue to track and go short as long as the rules are still in place. Same thing applies here, and you get short. One more move to the downside. So you see how this really gets you in sync with the trend regardless of what direction you're going, regardless of what time frame you're in. Now, what I've shown you so far is just the entry. Okay? We've just talked about entering. We've just talked about, what side of the market you should be on. That automatically elevates your chances for success by using that buy-sell line, the 50-period simple moving average. Go back as a homework assignment, I always do this in my webinars, and look at your winning and losing trades. And I can almost guarantee you that most of your losing trades will be because you're out of sync with that buy-sell line. In other words, you were buying when you were below the 50-period simple moving average, and you're selling when you were above. So what we looked at today was the initial of being in sync with the trend, either being above or below the buy-sell line. And then we changed the setting for the RSI to a 5-period setting. And then we got rid of the overbought, oversold, and just created a 50 midline. And that's your entry point. If you're going long, you're entering once we cross up above and close above. The RSI closes above 50. And then vice versa, once it closes below 50 to go short. Okay? But that's just your entry. There are still a number of rules for money management. There's a number of rules for proprietary exits, ways to move your stop to unchanged. Now, we applied all these, and this is a strategy that we trade at Specialist Trading. And let me show you the last 2 months' trading results. This is one of our newer strategies. That's why we haven't come up and shown you this RSI correctly, how to trade it correctly recently, because this is a fairly new strategy that we've been using here. So let me show you the results using our proprietary method, not only for entry, which you already know, but our proprietary stop placement, as well as our proprietary exit level. Please remember, though, that past performance is not indicative of future results. These examples are for educational purposes only. Always invest wisely. All right, here are the currency pairs that we track. Now, we don't track each and every one. We just track these big 7 here. And over the past 2 months, you can see the number of trades we had in each currency pair. British pound has the most trades with 7. The least is the dollar yen. We had a total in 2 months of 27 trades. It basically comes out to about 2 to 3 trades a week at most using this particular strategy. In the next column, we show you the number of pips that was made. Each particular currency pair, some better than others though, but each currency pair had a profit in these last 2 months. And then the dollar value here of what you would have made trading one lot. One of the large lots trading the forex. This is not the mini account. This is the large unit. But it would have been over 21,000. Remember, we're not saying that this will always happen, that these results are indicative of future results. But using everything I've taught you for entry, had you just known about stop placement and about proper money management and using our proprietary exit, these are the results one would have had. Just trading one lot, basically anywhere from 2 to 3 signals a week. Now, points to remember though. We've talked about entries. You now know the correct way to use the RSI and how to enter using the RSI. Okay? But we haven't talked about stop placement. Extremely, extremely important. We give you various levels in which to use stop placement if you want to trade this strategy more aggressively or more conservatively. Now, the results that we just showed you were trading the conservative way. The drawdowns are a little larger if you're trading aggressively, but the gains would be larger as well. We also didn't talk about exit signals. Exit signals are extremely important, and we use a proprietary exit signal that is involved also with our courses. And lastly, money management. One of the main things that you have to learn about when you're a conservative trader is stop placement. In other words, moving your stop up as the trade progresses. Okay? We have incorporated a way in which to move your stop to unchanged if we get to certain levels. This is a proprietary money management level of ours as well. So these are all things that are incorporated when you want to make a strategy, because up until now, all we've just talked about is the first category, which is entry. You must know about the other things as well. Okay, I want to show you this chart in the Australian dollar, and this is a perfect example of how you may know the entry, but because you don't have the other pieces of the puzzle, you can turn what would be a winning trade actually into a losing trade. Now, here we have the Australian dollar, and for all intents and purposes, it's not really going in any direction. It's kind of hugging, as you can see, the buy-sell line. So we're really not sure, just by face value, whether to go long or short. But the real rule is, if you get a setup to go long, your entry must be above the buy-sell line. Okay? So you cannot get a setup to go long and then enter below this line. So even though price may be straddling and overlapping the buy-sell line, as long as your entry is above, it's a valid trade. So as we see here, the RSI is below, the 5-period RSI, and then once it crosses above and closes above, the corresponding bar is right here, the setup bar. Now our entry is going to be 1 pip above, and that is above the buy-sell line. So this is a valid, it's not the most opportune setup, but it's a valid setup bar. So we entered and went long. Now, most people would have looked at this trade and after a week or two would have said this is a losing trade. In actuality, if you know our proprietary exit levels plus our proprietary money management, at the worst, this would have been a break-even trade. But at best, this came out to actually be a winning trade. Here's another trade as well. In the euro-yen. Okay? As you can see, we're once again straddling the buy-sell line. Okay? But the RSI comes from beneath the 50 to close above the 50 threshold. Here's the corresponding bar. So this is a valid setup bar to enter because our entry would be above this buy-sell line. So even though we're straddling it and touching it, we're not completely above. As long as our entry is above, it's fine. So we would have entered here. And look what happened. 2 days after we entered, the euro-yen fell out of bed. Now, once again, just knowing the entry rules, this probably would have turned into a large loss for you, not knowing where to place your stop, not knowing how to actually implement this trade correctly with an exit. But using our proprietary exit, this trade was actually a winning trade. We made money on this trade. We gave to our subscribers, or I should say to our members. So you have to understand the exit levels and the stop placement as well when using this. Okay, in closing now, I want to just take a few moments to talk about my website. I want to invite you all to become members of Specialist Trading. As I said in the beginning, I offer courses in stock trading, E-mini trading, and as you just saw, Forex trading. Each particular course comes with upwards of 10 specific and different strategies. What you receive as a member of Specialist Trading is detailed instruction, numerous Forex strategies, updates and signals, weekly webinars, archived videos, and this is a lifetime membership. So once you become a member, you're a member for life. Now these are just a couple of the trades that we give our members, showing you the last strategy we just talked about. These are actual trades that we alerted our members to go both long and short. These were the trades in March in the euro, British pound, and as a special insight to all of our FX Street members here that are watching today, we usually sell the package, the full package of my course for upwards of $3,000, but we're now starting to give individual strategy courses, such as the strategy you just saw. This comes with detailed video instructions. I'm going to speak in the course about the proprietary exits, which everyone is so interested about, and the stops. You're going to get 1-year trade signals for free. We alert you when there is a trade signal, and you're going to get a PDF of all the rules, plus personal email access with myself. So if you ever have any questions, you can email me, and I will go over with you and see if you have the correct signal in place. Now, this usually runs for $4.95. All of our FX Street members get a $100 discount for $3.95. This is for limited time only, I believe, just for the next 2 days. But what we just talked about, using the RSI correctly, this is our new strategy. This is strategy number 6. This is our momentum trader. It's a great strategy. You saw the results of the past 2 months. If you're interested, please contact my associate, Brett M. at specialisttrading.com. You can call him directly at this number as well. And if you'd like to simply buy online without asking any questions, you can come to this website right here, protraderstrategies.com, and simply purchase it online. Okay, sorry I rushed and I wanted to get to the question and answer portion before we ran out of any time. But anyone has any questions? I'm going to go backtrack here and answer as many as I can. Can we just draw a horizontal line at the 50 level? Yes, you can. It's perfectly admissible. Does this work on any time frame? Yes, as you saw in the examples, it does. You can use this on any time frame that we just saw, going upwards or downwards. Can we still look for a divergence in the RSI with the price? One of the things that I really strongly really don't agree with are the whole concept of divergences. I'm not saying that they don't work, but it's very subjective. You can show the same chart to 2 people. One person will see a divergence, another person won't. So divergences are extremely subjective. If someone is a really astute trader, if they really know how to spot these things, they can do very well trading divergences. You show the same chart to someone who studied divergences for years and years, they won't see it. It's difficult. I know I have difficulty seeing them sometimes. So I try to stay away from something that's not that concrete. And divergences are not concrete. So you want to see something a little bit more, that is telling you more rule-based. And all of my strategies are 70% rule-based. Okay? Jim asks, how do you filter out volatility? Is there a slack percentage on the RSI that you allow for confirmation? Jim, that's, once again, we talked about making things complicated. Don't worry about that. That's making it too complicated. Just follow along. I know I'm not going over everything because we reserve this for our members, but there's really not, you'll see with the RSI as well as with the 50-period simple moving average how volatility is working. And if it's too volatile or you're not getting valid signals, the strategy will keep you out. So don't overcomplicate by trying to figure out filters and slack numbers and stuff like that, because once again, that's going to lead you down the road of inconsistency. Okay? Could you please repeat the RSI value? The RSI value is 5. Okay, we want to go down to a 5-period RSI. We don't want to, lengthen it. We want to kind of speed it up. Okay. You're asking what the exit strategy is. I'm sorry, that wouldn't be fair to all our members who have paid the full price to give away all the rules here for free. I have already given you the entry signals. If you're, a student enough trader, you'll be able to do just fine with that, but you have to be very careful. Can we use this on a 1-minute chart? That's a very good question, Ramy. A very good question. I personally would not use this on a 1-minute chart, just because of the whipsaw nature of that small time frame. It doesn't matter if you're trading stocks. It doesn't matter if you're trading the futures or the forex market. There's kind of whipsaw effect, and you have to be very quick. I personally do not like to trade the forex markets in anything less than a 30 or a 60-minute time frame. So you can try. I haven't tested it. I haven't looked at it on a 1-minute time frame, but it's really up to you. What's the best time frame in my opinion? Go to a 4-hour time frame. I like to look at the 60-minute, the 4-hour, and the daily time frame. This strategy works extremely well on a 4-hour time frame. There have been some really great setups in the last week, and you'll be able to see them right now with all of the free information I just gave you. You'll be able to see them as well. Do you use trailing stops? Yes, we do use trailing stops, but that once again is reserved for members of the program. Once again, that program is usually only $4.95. We've reduced it down to $3.95 for the FX member. Does the entry need to be on the next bar? Yes, Alan, very good question. It does need to be on the next bar if you are trading the conservative approach. If you want to be more aggressive, and if you're going long, as long as the RSI is below the 50, continues to be above the 50 line, you can continue to track the price until you get in. That's a little bit more aggressive approach to trading it. Okay? So this again is explained in the class as a conservative or an aggressive approach. Some traders put on a moving average of the RSI. Have you tried it? Yes, I can, and I have done that before. And once again, it's just a door that opens up another door that opens up another door. My philosophy is to keep things as simple as possible. As I've said in all my webinars, and I tell all my students, it's the easiest thing in the world to complicate your trading. It's the most difficult thing to simplify it. And once you start adding an indicator on top of an indicator on top of an, it's just, you'll create more and more ways to eventually get inconsistent. Keep things as simple as possible, and you'll elevate your chances for success. Okay? So that's one of the reasons why there was nothing about adding a moving average to the RSI that came out and increased my odds, so I just didn't use it. Is it okay to use an EMA? Yes, it is. It's okay. I don't use an EMA. I know a lot of students prefer that. Some people even like a displaced moving average, just as long as you use the same principle of being either above or below the moving average. Okay? The RSI setting. RSI often crosses mid earlier than SMA line. How do we use the RSI confirmation SMA to confirm the SMA? Well, the first thing you do is the process is you always see where you are, where price is in relation to the 50-period simple moving average. So that's the first thing. We're not concerned about where the RSI is in the beginning. The first thing we're concerned about is where is price in relation. Once we see where price is, then we'll track the RSI. If things are in sync, don't worry. Just wait around, go to another currency pair, and you'll see another setup very soon. Okay? So it's not something that has to be, you have to worry about they're not in sync or it's crossing over before it's being followed by the moving average. Okay? If I understood correctly, entry can be made on the next bar. If was no entry signal on the first bar after a signal bar, provided RSI keeps above, respectively below with sells. Yes, Johnny, that is correct, but remember, that's an aggressive way to trade. If you're trading conservatively, you only want to take it on the next bar, and if it doesn't happen, then you just forget about it. Okay? Can we use this on stocks and futures like gold? Yes, you can use it on actually anything. It works the best on the forex market. This works the best trading the daily bars and the 4-hour bars, as I've noticed. Okay? What time do your daily candles print? I use several different brokers, and their charting packages use different time zones, which can change your entry level. Correct. I use the U.S. close, since I'm in the U.S. here in Los Angeles, which closes here at 5 o'clock Eastern time. So I use the 24-hour charts that close at 4:59 Eastern time p.m. and then open again for the next day at 5 p.m. Eastern time. Okay, I start off that, but this concept will actually work in any time zone. It's not only to that one particular. The concept is sound, so it will work in any time zone, in any charting software. But the only trouble is, as a member, if you purchase our class, we give you signals based off that time zone. So when we issue these alerts, these nightly alerts, it's based off the chart and the data that we're receiving, okay? Other question. Will this work on all other oscillators with adjusted settings? I imagine, it's a good question. I imagine it will work on other oscillators, but I haven't tested it. It's been my experience that the RSI is one of the best kind of overbought, oversold oscillators that needs to be adjusted. It really has a really nice tuning to it. So I would use the RSI preferred over a simple stochastic or any other type of momentum oscillator. It just seems to work best. But once again, I do not use overbought, oversold levels. I do not enter a trade based off of that. That can work 9 times out of 10. The 10th time, you'll give it all back. How many pips did you get on the last week 500 pip drop on euro with this strategy? We didn't get a signal with the euro on this strategy. So, we're only going to take when we get signals. See, that's the thing. When we have a strategy is 70% rule-based, so we're following the rules for entry. If we don't get a signal on a daily bar, we're not going to take it. Now, I will say on the 4-hour bar, we got a tremendous signal. We got lots of signals on this. Okay, on average, I would say each signal generated anywhere from on a 4-hour chart anywhere from 75 to 125 pips. So if you don't see one on the daily bar, you can go to a different time frame. But on the daily bar, we did not get a signal. Okay. Do you use the RSI in conjunction with another indicator, such as the stochastic? No, Jim, we do not. The only other one we use, the only indicators we use in this strategy are what I showed you. I've pretty much given you everything other than where to place your stop and where to exit. Now, if you're, as I said, a student enough trader, you can come up with that if you want to. You've got the makings here of a really great strategy. But if you really want to know how to trade this correctly with the results that we saw, even though it's not guaranteed, it can't promise you, but with that consistency, you're going to have to become a member. And I continue to trade. As I said, I trade this strategy as well. I'm with you every step of the way. I'll answer any question you have, and you have weekly webinars and nightly alerts to see that you're in tune with it. We just have a few more minutes for a few more. What do you use to avoid whipsaws? That's a very good question. What happens is the 50-period simple moving average, or the buy-sell line, will keep you out of whipsaws many times. So that right off the bat is one of the best things. So try using that 50-period simple moving average and only going long if you're above and only going short if you're below, and that will keep you out of a lot of whipsaws. Okay? You asked about email. Well, this is our email right here. I only reserve my personal email for the members of our courses. But if you have any questions, you can contact my associate, Brett, at brettm@specialisttrading.com. But according to the other strategy that you presented, you would have got a signal from this 500 pips drop. Oh, we're only talking about this particular strategy, strategy number 6. That's a different course. Okay, I think you're asking about a totally different strategy. We're only talking about this. This is the one where this presentation webinar was titled "The Correct Way to Use the RSI." In other strategies, we don't use the RSI. Okay. How long is the trade normally? That's a very good question. The trades can last anywhere from 2 days to possibly 2 weeks. All right, but on average, they're roughly about a week or so. Okay. If you have an entry on the 4-hour chart, are you concerned where price is in relation to the 50-period simple moving average on the daily chart, or RSI? This is probably the most commonly asked question I get. And no, I'm not. I just take each signal for where it is. In other words, if I get a signal to go short on the 4-hour chart, I don't care what's happening on the daily or weekly chart. For all I know, they could be getting long signals. I'm only concerned with the chart I'm looking at. I know a lot of people swear by this type of method and that they'll only trade if they get confirmation from a higher time frame. I personally have not found anything that works consistently with that. I know a lot of people swear by it, but I have not found any consistency to that. I do much better when I only look at one time frame. Remember, keep it simple. All right? Don't want to complicate by looking at a ton of charts and making sure that this confirms this, confirms this. I just look at signal for what it is on face value. Okay? I hope it answers your question. That's a great question. How to buy your book. Your website does not give an option for other countries. If you have any questions about the book, you can please go to give our associate Brett M. at Specialist Trading an email or call directly at 844-7220. What pair is setting up now? Boy, I thought you guys forgot about that. I wasn't going to even mention it, but now I see that you're interested. Okay, everything that I've taught you today, everything that we learned about the entry using this strategy, look at the dollar-yen on a daily time frame. Okay? See if it fits. See if we close there. Now, I've been speaking for about an hour. An hour before we began today, I looked at the chart, and it was in line. Now, in this last hour, I haven't been checking what's happening in real time, so for all I know, maybe the signal is not still, working out in that direction. But we do not trade based off what's happening intraday. We have to wait for the bar to close, which will close at 4:59 Eastern Time. Okay, so we have to wait and see where that's going to close. But as a clue, look at the dollar-yen. If that closes out, we would be giving signals to all of our members, telling them where to go long, but most importantly, where to place your stops and where to exit. Okay. How big the stop is normally? Well, because of our proprietary way and the way in which we conduct our stops, there's no, it's hard to say what's normal. I mean, sometimes it would be 75 pips, sometimes it would be 200 pips. So it all depends on our proprietary calculation. This is a calculation that you come up with. Okay. The best thing about this is that you know in advance. If let's say a signal has a stop of only 50 pips and that meets your qualification, then go ahead and take the trade. But let's say the next signal has a stop level of roughly 250 pips and that's too much that you want to risk. Well, then you don't have to take the trade. Remember, there are 2 or 3 signals a week. You can just not take one and take the next. Okay, you use bar charts in your examples. Are bar charts more effective than candlesticks when you're with your strategy? The chart has nothing to do with this particular strategy. All we're looking at is where the RSI is. The chart, the only thing we're concerned about is if we're going long, we're going to purchase 1 pip above the chart. Now, it doesn't matter if that chart was a candlestick or a bar chart or just a dot. All that matters is that we purchase 1 pip above the high range of that bar. So it doesn't matter if it's a candlestick or not. Now, in certain other strategies we use candlesticks, but it's a totally different strategy based on a totally different concept. So it's like comparing apples and oranges. This is a quick momentum catcher. We're not in the trades as long as we can be in some other ones. And there's different risk reward ratios. There's different gains. There's different things applied with other strategies. So it's hard to really relate them. The best thing is, like I said, if you want to become a full member, you get to see and take advantage of every single strategy we have, which is upwards of 10 strategies. And you can pick the best one that you want to trade. Okay? Will you be sharing other strategies with us? Well, in weeks to come, I will be giving more and more information about my techniques and concepts. I will not be giving you the entire strategy because that wouldn't be fair to the members who have spent hundreds, if not thousands of dollars to get the full strategy. But I will be giving you really nice tidbits of each strategy that you can go and use and apply, or you can just apply these concepts to your own strategy. So a lot of people will say, well, Steve, I'm not going to, really trade this strategy, but I'll work with that concept of the RSI. So there's a lot of different ways to use the information I give. Going down here, let's see, some more questions before will you, let's see, what are the pairs most suited for using this strategy? Okay, Milo, that's a very good question. The pairs that we watch are those big 7 pairs, basically the Australian dollar, the British pound, the US dollar, Canadian dollar, the dollar Swiss franc, the dollar yen, the euro yen, and the euro dollar. So I believe that was 7. And those are the ones we track. Now, this is not to say that you will not get a signal on another currency pair. Okay? This is only saying these are the ones we track. Remember, I also trade stocks, I trade futures, so I can't be, fully, spreading out and trading virtually everything, and I want to keep it as simple as possible. But those are the main ones that we track on a nightly basis. In other words, we give signals on daily bars. You can also track anything on a smaller time frame if you'd like. Okay? Steve, what if price is way above or below the 50-period simple moving average? Do you wait until it gets closer to the 50-period simple moving average line, or if it crosses to get into a trade? That's a good question, but no, all we care to see is where price is in relation. It doesn't matter how far away it is or how close it is. If it's below, we're only looking for short setups. If it's above, we're only looking for buy setups. That's a very good question, but no, we're not concerned with that. Don't want to complicate it, okay? What about gold? I've never tried this with gold, but you're free to look at this. Once again, you have all the makings to the beginnings of this, to the entry. So go ahead and try it with anything you like and see if it works. I have found that this works the best with the Forex markets, okay? Is the strategy good for weekly charts? Yes, that's one thing I was researching this last month. There are some really nice trades. And once again, go do the homework yourself. Punch up a weekly, even a monthly chart. You'll see these same setups where the RSI either crosses above or below and gives you an entry, all right? But you still need to know where to protect yourself. You still need to know when to move your stop to unchanged, and you still need to know where to exit. So these are things you have to be comfortable with. The reason I'm saying this is not just to say you have to buy the program, but I want you to be careful. You know, paper trade this. So many people that come to my webinars, their eyes light up and they're so excited, and then they start trading not knowing exactly how to implement this, and they lose money, and therefore they think it doesn't work. It does work if you know all the pieces to the puzzle. So either, you know, come up with them yourself, do some research, or become a member of Specialist Trading. I have time for like one more question here. Regarding the dollar-yen, don't you think it's a bit risky taking a short on that pair at this moment? I only look at signals. I see, this is another thing that was taught to me on the floor. Anything that comes into your mind that is, you know, brings about fear or doubt is something that's going to stop you from being consistent in your trading. If it's a valid signal, that's all I'm concerned with. If the stop placement and my risk is not too much, I'll take the trade. I don't ever think that it's too risky because of what may be happening internationally or what may be happening in the news or some news report that's going to come out. I really don't concern myself with that. So this, once again, these are only things that will serve to, you know, lead you down the road of being unsuccessful. If you see something that's worked over time, that's a sound concept, simply follow it. But by all means, paper trade to see if it fits with your personality, okay? Lastly, do I consider support resistance levels and fundamentals? Well, no, I don't consider those at all. In fact, once again, those are the things that are very good for people if they're investing. But if you're really trying to, you know, make trades that last anywhere from a week to 3 or 4 months, or 3 or 4 weeks, I should say, there's no reason to even, you know, be absorbed with that information because it's really just noise. Some people can trade very well off support and resistance and off fundamentals, but most people can't. I know people have been trying for years to figure out and decipher what fundamentals mean, and it'll work for a little bit and then it won't work. So why not stick with something a little bit more concrete, something that's simpler, something easier to understand, that when price is above or below a buy-sell line and when the RSI crosses over. That's it. Don't complicate your trading. If there's one thing I can just leave you with today, remember, it's the easiest thing in the world to complicate your trading. It's the most difficult thing in the world to simplify it. Okay? So what I offer are simple strategies that are 70% rule-based, and they come with about 30% room for discretion to decide whether you want to trade aggressively or conservatively. Remember, we have to end here. If you have any more questions, please contact my associate, Brett M. at SpecialistTrading.com. You can call him directly if you want to speak to him at 1-310-844-7220. Please take advantage of the special for the next 2 days only. The price has dropped $100 down to $395 if you want to become a member. Or you can go online at ProTraderStrategies.com. Thank you so much. I wish you all the best of luck, and we'll see you next month. Bye-bye.